home office, this is becoming a more frequent one. If you
talk to me about that, because most people will say that my CPA says that I can't do that.
Yeah, I mean, pre-2020, pre-COVID, home office was, I guess, kind of looked at as a dirty deduction, something that people kind of fabricate, if you will. But
yeah, I get it.
Nowadays, having a home office and working from home is
pretty
standard. Yeah, I mean, shoot.
Do you know the calculation on that, or like what? Tell me about it.
Yeah, so the calculation is basically it's pretty simple math. So let's say your house is 1,000 square feet. I know that's pretty small, but just for example's sake. And let's say your office is 200 square feet. So your office makes up 1/5 of the house, 20%. I can now deduct 20% of utilities, electric, internet, right? I can now deduct 20% of my mortgage interest, keyword interest, not your principal payment. I wish. Okay. I can now deduct 20% of repairs and maintenance. So, you know, the important part of the home office deduction is it has to be a legitimate office, right? If you just have a computer in the guest bedroom, that is not a home office. If you have a desk out in the living room that you work at while you watch your kids, that is not a home office. A home office is defined as a space, a space that's singularly used for business activities, and it has to have its own privacy. So basically a door. Okay. So like if you have, you know, a 4-bedroom house and one bedroom doesn't have a bed in it, it has a desk, it's where you work, it's nothing else is done in there, that's a home office.
I got it. Okay. And for that, you get a percentage of the expenses of the home. That then, okay. So where does that offset? So let's say 20% of, let's say it was, I don't know, let's say it was $10,000 that I was able to take in home office deduction. What's that get applied to?
That's going to reduce your taxable income by $10,000.
Okay. So it's right against your taxable income. So it's $1 for $1 on your taxable income then. Okay. That's pretty good.
Yeah. Yeah. And like I said, it's becoming more common. I haven't been hearing red flag when I tell clients to talk to their CPAs about it. I think it's just kind of becoming more of an expectation, quite frankly.